we have three experts on board to tell us how to trade come tomorrow. Venkat Ramaswamy, ED Edelweiss Financial Services, P. Funny-Shekhar from Angel, and Sandeep Wagle from AppStartIndia.com to chat technicals. And like I said, it flattered to deceive, got a good leg up from global markets this morning. So started off with a gain of about almost 0.5%, and then towards the afternoon session completely flattened out in a very narrow band. So sideways yet again, and this time it's slowly just about dragging its feet around that 56.50 mark, 56.60 on closing bell. Ditto was the case for the Sensex, no better when it came to the broader markets, wherein the market press closed in favouring the declines by a narrow margin. So 805 standing to the declines with 600 plus to the advances. The Bank Nifty as well pretty much mirrored what was happening on the index, the frontline index that is, closed in quiet for the day. Absolutely flat movement coming in there, and don't go by those jagged edges because it was a very narrow band that the market was trading in, be it the banks or the rest of the market as well. Quickly walk you through the movers in trade. They included the likes of Tata Power, Kane, Ranbaxy and Lupin held out very well. Lupin, remember, got a US FDA nod for a drug as well, so that all good well for this particular stock. Bharti did the turnaround even though the news flow was negative. So that stock did pretty okay. L&T as well as HDFC were your other big winners. On the flip side, there was weakness coming in for cement majors, Ambuja and ACC ahead of their earnings. And of course, repercussions coming in from the ET Now exclusive, wherein they may have to pay a 2% higher royalty to Holcim, that is their parent company. So those two stocks really took it on the chin. GAIL, SAIL, DLF as well as TCS were your other laggards in trade. Talk about the broader markets, and like I said, it was listless there as well if you were to go by the headline number on the index per se, but lots of stock-specific action coming in. First to the losers, IRB Infrastructure, with all the news for doing the rounds and a clarification from the management as well. But the stock tanked in trade. Ditto was the case for the Gen Irrigation as well. The stock was down almost 6% intraday. GMR Infrastructure, GVK Power, and then, of course, sugar as well took a beating. So Bajaj Hindustan as well as Balrampur Chini were your losers. On the flip side, gains coming in for Idea, Reliance Communications, Arvind, Dish TV. You had Hindustan Zinc, which held out very well, as was the case with Zee Entertainment. But what to do come markets tomorrow? So let's find out with our experts. Funny, what is your sense? Because in the near term, it seems like the markets have clearly hit a speed breaker after what we saw last 2 weeks.
That's right, and it's not such a bad thing also because post the relentless run that we saw over the last 3 months, and of course buoyed by positive sentiment on the back of policy action, some bout of profit booking was expected and necessary as well. So as the market consolidates around these levels of 5600, you are still seeing differential price action among stocks, something that we have been pointing out. What has not really worked for investors has been the high beta trade. Again, something that we have been saying that the market going forward in the next 6 to 9 months is not very different from what it was in the last 2 years, in the sense that quality will still be rewarded over high beta. So investors have to be comfortable with the fact that the floor of the market has gone up from 5,200 to probably 5,400. But at the same time, quality still pays. So if they are picking the stocks wisely, I don't see investors should be too much worried about the market consolidating or the index levels on a day-to-day basis.
Sandeep, how would you define the movement that we've seen, not just today, but for the past couple of trading sessions? Comfortable with the consolidation, or is it getting extremely narrow to trade?
Well, as a trader, nobody likes the process of consolidation, Ayesha. And if you ask me, I'm comfortable. I'm definitely not comfortable. Neither are my clients, because people are used to the move that was happening, the up move that happened from 5,200 to 5,750 over the past 3 weeks or so. So in that sense, some kind of a pain. But then yes, I would agree that this is a healthy consolidation. The next move will be smoother. If the consolidation doesn't come, there is a chance that the fall can be sharper. So in that sense, as long as the Nifty doesn't fall below 5,600, 5,580, I am quite comfortable, and the pattern is intact. I am looking at 5,900, 5,950 as the next target. Now whether that happens in the next couple of weeks time or it takes 3 to 4 weeks, that would be the only question. But the trend is positive, the pattern is positive, and the market as a position trader is a buy on every little correction, and I don't see the correction beyond 50 points from the current level in the Nifty.
Okay, continues to be sideways, not a good scenario when it comes to traders. But Venkat, what is your sense? How would you characterize the current market environment? Do you think the best part of the rally is behind us, or is there some more headroom in the near term?
See, reality is if the government persists with the direction that they have taken in the second half of September and early October, I do believe that the markets will remain in good shape. Now they are currently, because they ran up, they are in a consolidation phase, but currently, unless something significantly changes at the government level and I don't see too much on the economy level that is changing, I expect the markets to be in reasonably good shape.
Okay, in the thick of earnings, and today was HCL Technologies done, impressed the street with its numbers, and more importantly, the management commentary was bullish. They have seen some margin expansion as well. Venkat, what did you make of the earnings that have come out so far? Except HCL Technologies, none of the other Nifty 50 companies so far has surprised us. Do you think the second quarter earnings will make a mark as a bottom for earnings downgrade, or do you think it is too early for that?
I suspect, or my belief is that yes, you are right. This is sort of the bottom, and I don't see too much degrowth from here in earnings in most of these companies. There are also, outside of the Nifty 50, there are enough companies which are starting to show momentum and growth, and sectors which are showing momentum and growth, and which keeps me at least enthused about where the markets are going or the economy is going.
Sandeep, a quick call from you on that note on what some of these IT charts are indicating. Infosys after the selling that we saw after the earnings, HCL Tech today, and TCS slated later this week.
Well, Ayesha, I think the rise in the prices in the last week had already discounted whatever was in the offing. So none of these stocks are looking positive to me, at least in the short term. Infi is not looking good. I mean, I would wait for a level of 2300 before some buying can emerge. Even HCL Tech, which seems to be the best of the lot, I think I don't see a one-way move upside from current levels. So possibly a 5 to 7% trading decline can't be ruled out, and that is what explains the sideways nature of the Nifty. The IT sector is not performing in that sense.
The one pocket which was in focus today clearly was telecom. In particular, Bharti and Idea were in focus today on account of the refarming recommendations. Of course, all spectrum in 900 megahertz band is going to be repriced, and more importantly, refarming is going to be at the time of the license renewal. Funny, just want your take on this particular news on the telecom space. While it is a setback, it seems like the stock prices have accounted for any and every negative, which is why the stocks actually shot up in trade.
I don't agree that the street has factored in what can happen because of refarming, because industry-wide it's expected to be a hit of 125,000 crores. I don't know how the industry can afford to foot that kind of bill with the balance sheets in a precarious condition. Even within refarming, it's not clear whether they will be allowed to hold 5 megahertz, 2.5 megahertz within the 900 megahertz band, or the entire spectrum that they have been allocated will be reformed to 1800 megahertz. Whatever be the case, there will be significant write-offs in the current equipment investments that have been made, and they will have to make new investments. This is much stiffer ask than many in the street are accounting for, and I don't think this uncertainty has been fully factored into the price. And so we have a complete avoid on this entire sector, because refarming is just one of the many headaches that this sector has over the next 2 years.
Sandeep, how would you go about trading Ambuja and ACC after the run-up that cement basket has seen?
Well, a week earlier I was bullish in both of them, but the way it has fallen over the last 3 days, and ACC falling from a 1500 to 1420 or so, some more downside can't be ruled out. The weekly pattern though remains bullish, so I won't say that the move is over and we have to sell off. Some more downside to the tune of 3 to 4%, possibly that is an entry point. The longer term, the weekly chart, the monthly chart still remain bullish.
Funny, your take on prospects of ACC and Ambuja in terms of earnings visibility, considering this earnings are slated to come out tomorrow, and how much more headroom can the stock prices see?
See, earnings visibility is good. In fact, many of the analysts have been penciling in remarkable improvements in the operating margins for both ACC Ambuja and a whole host of cement stocks over the next 3 years. But this news of 2% royalty to Holcim is certainly disturbing, because what it does is it takes away the EBITDA per ton assumptions, that is the recovery assumptions over the next 2 years completely into the royalty basket. And that will peg back the valuations to a considerable extent. And of course it doesn't help that in cases like ACC, they are still trading at 10 to 40%. You can pick a cement stock, they are all trading between 10 to 40% above the replacement value. So valuations not being on their side, and with this kind of adverse news coming in, there might be some more price pressure on both these stocks.